There we go. Hopefully everyone's okay with that. The reason why we record is so that any kind of snippets we will put on the podcast, we will put on the YouTube channel as well. I'd like to welcome James, one of our directors, director of many things over at DSAI. So he's going to be MC for today, and David McIntosh has kindly given us his time to talk about what BlueFireAI are doing. But James, I'll hand over to you to take the festivities onward.
Thank you so much, and really looking forward to this evening. I think it's going to be a great little chat. Just checking if we have Arturo on the line yet. Do you know if he's joining, Mark?
Don't know. He might be out skateboarding somewhere.
That's all right. Arturo is another one of our co-presidents of DSAI. I feel a bit funny now. I'm going to be passing it straight back to you, Mark. Just before we kick off, do you want to give a short update about the things that are happening in DSAI, the events that we got planned, and yeah, other business?
Of course. So for those that are joining and maybe weren't across to the first quantitative finance talk that we had, the original premise and plan for this was to actually have these as live events. And we actually started looking at live venues when COVID hit Sydney. So it was unfortunate that we couldn't do it then, but it does mean that we are able to, record these more easily since everyone is on Zoom. And for anyone that is interstate, they can tune into this kind of stuff. So there's some benefits and silver linings from that. In terms of DSAI, Arturo and myself are co-presidents of that with James and others. Kazim was here before. He's here as directors. And we're a voluntary organization all focused on the art of data and how do we help make people that are interested in data even more interested, and how do we help share our knowledge with the world? So whether that's through articles, blogs, videos. One of the key focus areas for us, especially Arturo and I joining last year, is that both Arturo and I worked in quantitative finance overseas and also here. I worked at the ASX and an investment bank here. I had a startup that moved to London, and Arturo has had over a decade of working in data and technology as it relates to finance. So he would, if he was here, you could even have just a session just talking to him, James, and maybe we'll do that at some point. But DSAI is about many different things. It's not just finance. Data is pervasive across the spectrum of different industries. So one of the big things that we are looking at doing, and we've actually started organizing this, is it's not announced yet, but you guys get to actually get a sneak preview. The idea is that we're going to do a big data hackathon at the end of the year. And knock on wood, permitting that we are able to do live events, it's going to be an in-person hackathon. The theme is data for social good. And the idea around that is that different industries, finance, healthcare, property, government, smart cities, all that kind of stuff, we are looking at solving industrial kind of problems in those different spaces, whether it's companies that have data, or it is the kind of data, like we all did the census, or most of us probably did the census the other night, the type of data that you get from government and open data, and looking at that to solve challenges in each of those industries for social good. And there'll be a whole heap of examples that we'll be throwing out over the next couple of weeks, so stay tuned for that. Apart from that big event at the end of the year, that'll be in November, hopefully, if we can do live events, we are going to continue with these talks, especially whilst most of Australia is in lockdown. We want to do these talks to share the love, to share our passion for data, and bring along very interesting guests who are doing things that might not necessarily be in your industry per se, but have ideas and things that relate in the way that they are analyzing data, the way that they are doing really unique kind of insights from that, and processing all of that. So James, back to you. And if anyone has any questions about DSAI, we are on LinkedIn. You can sign up on our registration page if you're interested in just attending events or you want to volunteer. We're always on the lookout for people to help. If there are things that you are interested in speaking about, then we can definitely bring that along too. Thank you.
Yeah, and I was going to say, if anyone has any questions about DSAI while we're in this chat, even you just drop it in the group chat. We're going to have it up, and we'll see if we can answer them as best as we can. Now, on to the main event. David, welcome.
Thanks, James.
So again, I'm going to reiterate how much I'm looking forward to chatting with you. I know we had a little chat before this, just to introduce ourselves. So tell me a little bit about you for the benefit of the group, and a little bit about what BlueFireAI does.
Sure. And thanks again for having us on. It's an honor to share our work, and we appreciate your interest in our work. I've spent most of my career on the sell side of the industry, 20 odd years in investment banks, various banks in Australia and in Hong Kong. And actually met the company in my last role at BNP Paribas. I was fortunate and just lucky to sit next to one of the CEOs unbeknownst to me, and was listening to this individual talking about this business that they were building and doing some really interesting things. And that business turned out to be Bluefire. At the time, BNP Paribas had actually contracted Bluefire to help them with decision making. And I was just lucky to sit next to the CEO because there was a spare seat on the dealing room floor. So Bluefire itself started out as a think tank inside BNP. And the bank was looking at how could they make better decisions with new technologies and large pools of data. And the founders of the business realized that if they were really going to explore what they could do in that field, they would need to incorporate and form their own structure, which was the birth of Bluefire in 2016. Early years were spent in R&D, talking with the street in terms of what were the areas that we should work into, what would the street pay us for. And relatively quickly, that took us into the area of risk management and portfolio construction. And I guess we can come to that a little more as we continue to talk, James.
No, that's all right. I think there's a lot of companies or even teams within large organizations that potentially misuse the term AI. I think a lot of people that I've certainly met, think that if this, then that decision tree, qualifies as AI. How does BlueFireAI use its AI technologies to get better outcomes for its customers?
Yeah, look, that's a really good question. And you're quite right. AI is a term that's thrown around to answer many things. And candidly, we leverage the AI piece to do one very specific thing. The outward expression of our technology is known as Emmalyn. We gave her a name quite a few years ago. She was live on Symphony. We found people weren't interacting with what was used to be called Bluebot. And so Symphony said, just give Bluebot a name, and overnight the interaction went up. But nonetheless, the AI is Emmalyn's ability to connect disparate data streams and data points into intelligence. And the way in which she does that, I won't bore the group on this particular call. If anyone's interested in the framework and how we do that, happy to share the work. But our framework involves connecting forensic balance sheet statement analysis. We're looking at market data, behavioral profiling, and connecting machine reading events across the web around the companies that we're monitoring on behalf of our customers. And at the moment, we're looking at around about 10,500 customers globally. To do all that and extract insight from different speeds of data sets with different moving speeds is a very difficult task without the use of AI. To create what we would say is states of risk around the companies that we monitor, and then produce actionable insight to the smart humans that we work with. So AI is specifically used in connecting disparate data points and to produce genuine insight that we now deliver in terms of signals to our customers.
Sorry, fantastic. Are there any other tools out there like BlueFireAI? I mean, I have never heard of anything like this. I think it's a fantastic product. I can definitely see the benefits. But does Bluefire have any competitors? And if so, how does Bluefire differentiate itself?
Yeah, good question. Look, when we set about building the business, we looked at the infrastructure that the street had, and we've all lived in the problem. Anyone who's sat on the commercial side of this business has sat on the trading floor, behind the screens, and sat in the problem. So we really tried to set out to build something that was quite unique. And I think the point of differentiation there was building something with a forward-looking predictive lens, which if we get into some of the challenges of marketing AI and this sort of business, we can get to that later on. But when we first set out to build Bluefire, the point of difference was something that was looking forward. The industry had plenty of alerting systems that were coincident, that would look at historical data, linear platforms, and say something has happened here, but not a lot of insight of, hey, there's some data here that suggests there's something might be coming down the track. And that's really where we got our start. JP Morgan, I don't think it's a state secret that we worked with JP very early on. They brought us in to mitigate after the collapse of Steinhoff. And we spent quite a bit of time inside the bank, looking at the processes, the systems, talking to the people. And what we found was that those processes were good, people sound, systems good, but there was a blind spot. There is so much information floating around out there in relation to listed companies. If information is missed and it's not transacted into those risk systems, then the risk processes aren't kicked into action and things are missed. And that's exactly the situation in Steinhoff. And so we've spent our life very much looking at tail risks and idiosyncratic risk in listed companies. And that's what the streets told us from fairly early on was a value for BlueFireAI. And if you think about why is that, well, the investment industry typically looks to unearth pockets of unacknowledged growth. We simply look at the unacknowledged pockets of risk. And so it's a quite complementary relationship we have with the active management industry or the investment industry where there's active risk control going on.
I certainly remember my days. I can't remember how many of the people on this call were in our last chat. I mentioned that in a previous life, I was a proprietary trader of bond derivatives. Man, could I have used something like this? Because I basically had my tweet deck up, I had my charts up, I had my newswire up, and nothing. I couldn't find any reason why the price would go ballistic. But yeah, it sounds like a super powerful tool that I'm sure delivers value almost immediately. Speaking of value and AI, where do you see the future of Bluefire? What is Bluefire working towards? And where is Australia, I guess, as a technological front relative to the rest of the world?
So I'll try and answer that in two parts as well as I can. Where do we see the future? I don't think it's, we all hear that technology is coming, it's rising. The role of interoperability between technology and the human layer is still really being explored. We're at that starting stage of that. We're certainly not at the middle or the end game. How does automation work in with an industry that typically hasn't changed in decades? And how does that automation play in? How do we reduce the fear around technology? That the machines are coming for the job. The machines aren't coming for the job of a smart human. The mathematical layer is miles away from replicating human decision-making, but they do have a really powerful way to enhance and augment the human nature and way in which we manage investment risk. Emmalyn reads 10,500 news wires a day. She's covering 130,000 writing analysts. We're looking at the decisions of 270,000 active investors. It's just not possible to aggregate that information as a human, and nor should it be. But equally, Emmalyn can't make any subjective decisions. She's purely objective and bias-free in her approach. She uses data to provide insights. And so the role for us is really finding customers who are interested in digital innovation and working with us to see how can we work into your systems and your processes to ultimately help you mitigate risk, hopefully outperform. That's essentially the answer to that piece. Australia, we were very early in this country in 2017 marketing a predictive framework. It's encouraging in 2021 that the industry is certainly moving in our direction, but we're still a disruptor, so it's not the easiest path that we beat. If I look at the Asian markets, for example, or Europe or US, where we're live as well, conversations are a little easier, but certainly it feels like in Australia that the tide is turning, which is really encouraging.
There are a couple of things that I want to unpack in your answer. In terms of the predictions for the next couple of years, and in terms of the Asian markets, I don't know where to head first. Let's start with the Asian markets, because I think that's something pressing and something that people generally are interested in. So personally, coming from a quant finance background, I find China just an enigma. The only thing I know about them is, their political ties to Australia, that they import tons of our natural resources, they export tons of plastic, they emit tons of, emissions. But from the investment side, I hear that they're free of quantitative easing. How does that work? And how does Bluefire perform in such a, I guess, abnormal market to the rest of the world?
Yeah, well, that's an interesting one. When we began building Risk Radar, which is the core product that we offer, There was demand very early on to have an approach that looked at onshore China companies. And I think I mentioned I spent a long time in my career in Hong Kong, so quite familiar with Asian markets. And yes, China is a unique market in its own right. But where we sit today and looking at how China operates and an idiosyncratic lens that we bring to the table, and people may not be familiar, the regulatory reporting regime in China is actually quite strong, stronger than many people give China credit for. The difference in China is you've got a huge retail component. You don't have a lot of investment banks writing on the companies. And so there's an asymmetry in information access. So we saw a gap very early on to build a dedicated product in Mandarin without any translation requirements that reads at line item level in Mandarin so you don't lose context. That work was sponsored by the Singapore government, and we work with a number of universities. It's documented work. But what you end up with is a very good lens into onshore Chinese companies that has predictive power in the future prospects of those companies. And that's probably coming to a fore this year, particularly now that China is allowing companies to default. The implied hand of China propping up companies is moving away. And so investors are looking for another way to look at risk in onshore Chinese companies. When we look at the performance of our signaling in China, however, you mentioned QE, the Western markets have this false level of financing of companies, the so-called zombie company, if you will. The idiosyncratic drivers in China do not suffer from that. So we're actually seeing China operate far more orderly than some of the Western markets in which we're looking at risk in listed companies. But yeah, China's a huge opportunity.
I see this flurry of SPACs in the US, which is causing all sorts of ramifications on, I'm not going to go into the politics, but Senator Powell, with the proverbial money printer, enabling all of these companies to prop up willy-nilly. But as you're saying, you don't really get that in China. And so for kind of all intents and purposes, it's a more efficient market than the West.
Yeah, look, we see it. And again, when I say we see it, we're looking purely from a data perspective, the performance of an engine that is designed to surface idiosyncratic moves in companies. So I simply look at that as the performance of us in that market. Performance is strong and consistent. Whereas if I look at the US, Emmalyn at the moment is literally adjusting for a regime shift based on QE and COVID. And I guess that's one of the things that, maybe not for this discussion, but the value of an automation or a machine-driven approach as opposed to a human analyst approach is that ability to benchmark and recalibrate. The terminology in our framework would be adjust for regime shifts, but we digress.
Super interesting. Now, moving back onto the predictions for the next couple of years, not just with Emmalyn, but I'm sure something topical that I thought was exclusive to APRA, but turns out the Fed is well ahead in terms of regulatory change, ESG, forcing various investors, or I should say investing institutions, to put a temperature score on their portfolio, forcing investors to explain their AI models, not just for underwriting, but for anywhere across the bank. And then now APRA's kind of taking hold of that idea and putting ESG on the Australian agenda. One thing that I've seen institutions do fantastically well, especially in rich capital markets, is towing the line. Now, the regulators and the financial institutions can do their best to do this battle between ambiguity and compliance. But where do you see this world going?
Yeah, look, we're not immune or deaf at all to the sustainability piece. In fact, if anything, one of the core ethoses of the business was to produce a lens that can facilitate a more efficient flow of capital. When we designed the framework back in 2016, obviously you're thinking about a framework that is robust, can absorb a lot of information, that can be systematic. And where we got to on that piece was designing what now is a very strong framework around the G, the governance piece. Why is that? Well, we can look at the drivers and the decisions of management and tether those to a price output, whether it be in equity or credit. As we've moved through the years and the rise of ESG and sustainability has been ever upwards, How we adapt to the E and the S piece is in relation to how Emmalyn reads around companies. So we've spent a lot of time on source design and the libraries and the curation of the information that we read around companies. And that's from newswires, from bulletin boards, from footnotes and analyst reports. We're looking at union web wires. We look at a vast array of data points. But what we're finding is that when we see something that is an environmental or a social impact that we're reading around, and that has to have a negative impact to the target, we tend to be relatively early, sometimes in relation to or in comparison to dedicated ESG providers, which we are not. We're a governance lens and an early risk warning lens, but we are certainly brought into a number of conversations because we produce a different way of adapting to the sustainability piece, and one that brings with it other benefits as well.
So, of course.
So
go ahead.
No, I think we probably explored that one. But again, for anyone on the call who's interested in the approach on this, happy to share more information on it. But the nature of the lenses we look through, i.e. forensic balance sheet, looking at the behavior of the herd and how the analyst community and the buy side are looking at this, and they are absolutely front and center concerned with sustainability. We're picking up moves of the herd when they're changing their minds on the companies we're monitoring. Market data less reflective of sustainability and ESG things, but certainly when we're reading around companies, there's a lot of information that can be extracted at line item level if you've trained your machines to read the same as you and I would read that same information.
We've just had a question come in from David Triggs. If you are mainly finding interesting information, does that help you deal with the lack of explainability of many AI systems?
Yeah, good question. So are we a black box? No, no, we're not. We wouldn't have a business if we couldn't explain why it worked when it worked. And that's a really key thing. And so when we sit with global asset managers and we're put in front of the audit community or the board, we have to be able to explain where does the insight come from. But as much as we can look at all the available inputs to our models, and they're all public information, there's no secret source of data, we're just bringing in a lot of information and asking questions of it and tethering various intelligences together to come with that ultimate insight. Yes, there is a degree of AI that has to go on in terms of connecting those data points that we talked about before, but it is definitely not a black box. So when we are surfacing things to our customers, we're pointing them in the direction of where to conduct that next investigation to essentially validate or invalidate the risk that we surface. So it's a very key proposition for us that our role and responsibility in life is to look at large data sets, cover your portfolio, and nudge you to action when we see a deviation from pattern or something that you should be aware of. At that point in time, we explain to you whether that's from financial statements, whether it's something we've picked up from herd profiling, whether it's market data driven, or if it's news driven. And if it's news driven, we'll typically surface what we're reading to you. At that point, we stop and it's over to the customer to work out whether or not they want to do anything with that information. Is that known risk in their world or is it an unknown risk? If it's an unknown risk, then your own processes kick in and Bluefire has nothing to do with that. To that extent, customers don't need to share anything with us in terms of their portfolio construction, their investment theses, nothing in relation to the IP of their businesses, simply just the companies that they're interested in. We cover those companies for them. I hope that answers the question.
It certainly sounds like, yeah, it did. It reminds me of a conversation we had earlier about the sniffer dog analogy. How yes, some of your clients, when you approach them, they think, oh, AI, yes, go talk to the quants. That's it. You know, your job is not to talk with management. Your job is to talk with the quants because you're a quant thing, and then off you go. Tell me a bit more about the sniffer dog.
Yeah, I thought you might bring up the dog. When we first started out. Well, I don't think we defined the problem we were trying to solve very well. And I guess we can come back to that in a moment. But I think we turned up with a shiny toy that we tried to convince people could do lots and lots of things. And the industry said, look, go away and figure it out. What's the one thing that you do well and get good at that? And so we used to speak with customers and they would say, all right, so you're a quant shop. Go and speak to the quantitative element of our business and you can do data testing. And that really belied what we were trying to achieve, which is using quantitative techniques, lots of data, algorithms, and so on, but to produce some pretty simple and intuitive outputs. forward-looking predictive risk states in listed companies, red, orange, and yellow. So where the dog analogy came in, and I seem to recall a meeting, and it might have been in Hong Kong, I forget, but the CEO was being questioned by a particular customer about, well, you need to talk about the inputs. You need to know why. Why did Emmalyn come up with this particular insight? And he said, well, let me explain it to you this way. Bluefire is like a sniffer dog at the airport. Our role is to sniff suitcases. And when we find something with something in it that's interesting, we pause and we look up at the owner. You're the owner. You're the customs official. We simply know that we can smell guns, bombs, or drugs in the suitcase, but we're not the customs official. That's where we pass it across to the customer to open the suitcase and assess the actual risk inside. So do we want to talk about the formative years of the dog and why it's barking? Or are we looking at the suitcase and assessing the actual risk, i.e. the outputs? And so it's a simple analogy, but it's still a powerful analogy in terms of how people utilize our products. And really one of the challenges, and you mentioned before, what are the challenges? There's a trust equation that we need to get to with our customers to trust that the technology and a machine can actually surface things that the human layer may not be able to see, literally because it's stressed for time and information overload. You mentioned before drowning in data. There's a quote somewhere, I forget who mentioned it, but we're drowning in data but starved of insight, I think was the quote. Our role is to absorb that in all that information and make sense of it. Once we do make sense of it and provide an insight, we stop, because that then is into the investor's world or the investment bank's world in terms of what do we do with that risk? Keep, add, trim, hedge, exit, or do nothing because they're already aware of it. Yeah, the dog's a good one.
I recall when I was in my consulting years that someone making the argument about AI taking over my job. And I said, look, maybe one day, but I don't think the real argument is man versus machine. I think it's machine plus, right? Machine learning and AI is not a new idea. I recall seeing papers for neural networks from the 80s, which were even refined from the 60s and things like that. Theoretical models that have now been enabled by computers and by multi-processors and by huge amounts of RAM and things that computers just could not fathom doing decades ago. What is Bluefire's role in this, and how do you encourage your customers to think about enabling them rather than trying to take over the jobs of risk professionals like myself?
Yeah, look, we absolutely, the business model is not designed to remove the role of humans. Machines can't replicate the fact that, or the domain expertise that a 10-year, 20-year seasoned analyst has. No chance. But what's the number of companies that a human analyst can literally cover? Our research would suggest somewhere between 25 and 60 is probably the industry average. Beyond that, it starts to get very difficult for the human mind to aggregate all of that information. So where our conversations typically begin with customers is, what are some of the lower value tasks that are very time consuming? Could they be automated? And if they were automated, what would that free up time to do for your high value human capital? So where that brings us into is automation of low value tasks, freeing up time for higher value tasks, generation of alpha, visiting clients, client outreach, et cetera, the things that humans are uniquely designed to do. And so our conversations typically start with what's the business's approach to innovation? Are you looking at AI and innovation to support your valuable human capital? And what are some of the things that we can help to automate to improve the decision making? Because ultimately that's what this all boils down to. Can we utilize data and new technology to improve decision making? What does that mean? In our world, that's the allocation and reallocation of capital based on new information in a predictive sense. That's really the area that we work into. And we see a change in the body language. I mean, I've been marketing in Australia now for 4 and a bit years. I think in Australia in 17 and 18, we had 138 no's in a row as it relates to our technology and would it have a home? It's really encouraging now to see that some of those conversations are now starting to come back to us. I wouldn't say it's an easy road to walk. I think someone threw the line out that innovating is hard. It is. I mean, we're disrupting an industry that hasn't changed for many, many years. But the problems the industry face can be boiled down to two things: scale and cost. Too much information, too few people, leading to expensive active management over passive. And when information is omitted, returns are impaired. And the industry continually keeps getting tripped up by these black swan idiosyncratic events. So we spend our days and our weeks and our life looking at how can we help with the surfacing of insights to help the industry avoid some of these painful events.
It's extremely high value conversation that I hope you really get to put into management and they don't just fall off as some kind of black box technology. I bet that you probably also get the argument that if there's a black swan event and your system didn't flag it, then that must mean it obviously doesn't work. Well, I'm not going to even entertain that idea. I'm going to trust that Bluefire is the best at what it does. And it certainly sounds like you're delivering value to your customers in innovative ways.
On that one, it's an interesting one because, if we miss something somewhere, we'll certainly get whacked over the knuckles and say, why didn't Emmalyn see this? But rarely do we hear, well, actually, in the other 10 things you picked up really, really well, so thanks. But when we do look at the collapse events, we do see a pattern. And we've been looking at these now for years. Started off with Steinhoff and JP, through to more recent events in China around Huarong and China Fortune Land. The saying goes that history doesn't repeat, but it rhymes. And that is really relevant when we look at company collapses. There are always these precursors to the ultimate collapse moment. They typically begin with management decisions around changes in the balance sheet. Then we start to see smart investors changing their behavior as it relates to the listed assets. Then you might find the media or active journalists starting to pick up on a story. But there's this rolling risk narrative that builds in companies before the ultimate event. And that's really what I think we've become very good at bringing that to the table. And when we work with customers, that's the sort of workflow that we work with our customers on. Risk isn't just an individual, one single event thing. Risk is a storyline. And I think that sort of resonates with the customers that we're working with. To that extent, it can't be a black box. It has to be explainable. And the front end of the platform is quite an intuitive way at looking at the way we read around companies, the way we illuminate the balance sheet, the way we peer benchmark, and how we talk to the street, and that information that we then bring back to the individual user to inform the decision, not to make the decision for them. The decision doesn't stop with Bluefire. The decision is the customers. We're just the information agent. If that sort of explains that.
Definitely.
I'm going to jump in just on that one. There is a question though, so I'll save my comment just on the design of the app, David. So just preloading you to think about that, because I think it's quite unique what you guys have done with thinking about how the front end is designed. And as someone who has had to, deal with, I've got a smart system or whatever it was that I've, been working with over the years, but it doesn't hit the mark with end users because of that design aspect. So we'll go back to that. But James, there's a question in the chat.
Yeah, I've just seen that. So David, what do you think about the CBDC, or the central bank digital currency? Do you think that data science and AI capability will manage the majority of financial transactions, stock exchanges, monitoring and decisions as I think a predictive theme?
Look, that's a question far above my pay grade and outside what we do. We literally look at listed companies. We don't look at digital assets. We're not into Bitcoin and crypto. If I take a broad brush on that, I can't see that automation and AI won't play a role there. But unfortunately, that's not something that Bluefire looks at. So no expert in that domain, other than to say, with what we've seen our technology doing in the listed space, credit and equity, I can't foresee that some other company who specializes in the CBDC space won't provide value there too.
That's fair enough. One other question has just come through. from David Triggs. Thank you, David, for your question. Do you think that deep neural network-based NLP could allow Emmalyn to read at the article level and not just sentence level? I'll interpret that to talk about the context of the article and try to pick up subtleties in human language rather than, as a sentence by sentence kind of structure.
Yeah, look, it's a really good question. And if we couldn't read at line item level and able to event extract multiple events from a single article, I don't think Emmalyn would be as powerful as she is. And David, if you want to touch base after the call, I'd be happy to share our work with you on that. We've been published in various AI and mathematical journals for our work in event extraction in English and Mandarin. But absolutely, when we've trained Emmalyn to read, and it takes a long time to train a machine to read like you and I would read. When I joined the company, they said to me, if you're going to sell this business, you need to understand what it is about training a machine to read. I thought, okay, well, that's fine. The building blocks, anyone can download. Google has the building blocks for machine reading and machine learning. It's actually training a machine to read like a human analyst in a capital market analogy. That's where the real science and the art of it begins. And if I need to make that point clear, if you just go and Google bull market, it will likely say to you, do you want to buy a bull? So you need to connect the concept of what is a bull market in the context of the capital market framework. And if we need to put a new concept into Emmalyn's reading library, and we did this for one of our investors early in the year, they wanted 3 new words added to the ESG library. We had to machine score around about 41,000 articles before we got the machine reading up to a level that would recognize at line item what those terminologies were and how to actually tether them back to an impact to the target company. So thank you for the question, but yeah, we put a lot of source design and energy into training reading to read like a human. There's no point us surfacing articles to a customer because the headline has something interesting in it, and then the body of the article is just noise. And that gets even more specific once we look at reading in Mandarin.
I think the type of article that you're talking about is clickbait.
Yeah, and we're well and truly aware that bigger companies typically have more written about them. So you have to be able to read and look for the nuanced pieces of information to inform decision making, not necessarily just reading more and more, because if more and more articles are read and they're broadly positive, a sentiment scoring machine, for example, will tick it broadly positive. That's not accurate enough to allocate capital against. And so we've spent a lot of time thinking about how we design that.
I've got one just going back to the design thing, and I think this is important for any kind of system that people in the audience might be using, might be building, or even thinking about. And I think it was really because David, you and I, we've known each other since my ASX days, and we've spoken quite a bit, but I found it quite interesting. I mean, I've already known about this stuff for a while, but I don't know when it was that you looked at a redesign. Could you describe the redesign a little bit?
The redesign really was in relation to the stability of the tech stack. And as we're dealing with bigger and bigger organizations, the stability of the signaling has to be, we can't have outages. So there was a lot of work put in and around 2018 in relation to stack design and stability. But then the versioning of the product, and maybe that's what you're referring to there. As we've evolved and as new customers have joined the business and asked different things of us, we've constantly updated the versioning of the product. And so we're at version 5 now of Risk Radar. That's been a really interesting piece in and of itself. You mentioned before, how do you design something that's intuitive, that's useful, that people will actually utilize? We've spent a lot of time pre-COVID literally sitting with analysts, with PMs, with the risk function, and just observing what that workflow is. Not saying anything, just simply saying, someone taps you on the shoulder and says, have a look at BHP, risk alert in BHP. What does the human layer then do to assess whether that risk is something that should be investigated or not? And so the framework that we deliver now to the street is broadly based around what we've observed from our customers of how they approach the problem of validating or invalidating a risk from whatever signal, whatever system they're being signaled from. The final point of that is, and we can't take advantage for how the system looks today, the the CEO team had the brilliant idea to involve a gaming company around about 6 months ago. They know nothing about finance, but they're used to making things look pretty and keeping people in a workflow. And what they brought to the table was really quite interesting in terms of how to make this stuff visually appealing and to be able to extract insight from visuals as opposed to written information.
That sounds quite innovative. I think a less laterally thought company would just hire marketing professionals to try to update their UI. But getting a gaming company it seems like the obvious answer, right? Because the whole reason why gaming companies succeed is they produce a game which keeps people playing, right? So why would you not, bring that kind of professional into a UI space for the purposes of finance or anything else that doesn't typically get that kind of resource?
Yeah, look, I wish it was my idea, but it wasn't. But yeah, look, they have a completely different eye for how things can be presented visually, and just how to make a workflow intuitive. But it still dials back into the research we've done around what is the typical workflow that we observed, and then how do we bring that into something that answers the majority of asks of our business from the customer base. We certainly can't do everything for everyone because it needs to be scalable, but we think what's there at the moment, we've been rolling that out now for the last couple of months. It seems to be landing well.
So we've spoken a lot about the success of BlueFireAI and all the beautiful innovation that you guys have materialized. What were some of the hurdles and some of the challenges that you found along the way? And you can go as far back as 2016 or when you sat next to the CEO. Where were some of the moments where you fell over and you thought, oh, it's not going to take as quickly as I thought?
The staring at the ceiling at 1 a.m. in the morning thinking, why did I leave the investment banking world?
That's absolutely right, yeah.
Yeah, lots of those. I think one of the key challenges is to figure out what is the problem you're solving. And that's not a trivial question when you're trying to play in at the pointy end of the industry, i.e. decision making. So getting that question right, what are we trying to do? I think very early on, when the product was not mature, we had this idea that we could build something pretty and people would do something else. It can't be another thing to do. And so I don't think we learnt that lesson clearly enough for probably a few years when we really started to just hear, look, guys, make it fit my workflow. We're not going to fit your workflow. That's a lesson we just have to hear. So getting the question right, key, because if you can't define the question, then you certainly can't define the solution. And market fit, getting the product to fit with the market in terms of a workflow that is typical in the industry. And even though we'd spent a lot of time in the industry ourselves, I think we really had to focus internally on how can we fit the streets workflow, not necessarily Bluefire's suggested workflow. We're small, we need to change. We're the agile piece here. FinTech should be able to fit the larger organism, which is the industry, not the other way around. So that'd be the first two I would surface. And then literally marketing something that's different. It's not an easy path, even though, on this call today, people possibly listen to this and think, wow, that's amazing. Everyone should have this. Then you go to the street and actually try and market the thing. And it challenges a workflow that, as I mentioned before, literally hasn't changed in 2-3 decades. So finding the evangelist inside the organization that you're hoping to work with is a really key piece. And I think that's probably some of the errors we made early on. We weren't thinking about who the user might be, who the evangelist in terms of who would actually see the value in the product and be able to market us internally, given that we're still a company of 20 people and we're talking to organizations with thousands of people. And so we really had to do a lot of critical thinking around what is the right person to initiate that discussion with, so that Bluefire is then brought in and framed in a way that isn't threatening to functions inside the business. Many and varied other challenges along the way, but if I think of the big ones, they probably stand out in terms of the main sort of challenges. And of course, I guess early on, you don't have a brand. So with Bluefire, roll forward today, we're still relatively small, but there is a little bit of, there's some street recognition, which is great. We've been fortunate enough to win quite a few awards. So they're really valuable in our world. And the Singapore government has been a massive supporter. So we are really fortunate to have the backing of the various grant regimes out of Singapore. I think without that, it would have been a difficult road.
In another previous life that I've had many jobs over my career, which you probably didn't touch on. I used to work in media monitoring. It's actually where I met my wife, funnily enough. So I was in the search team and she was in the sales team, and I kind of got to see the entire workflow of a media monitoring business. Now, I think you're going to say this is quite a loose connection, but I can see the value of an instant risk rating given the highly manual process that it takes to monitor media. So a client, typically like a big bank or another ASX top 100 company would call up and say, look, we need to know every time our CEO is mentioned in the paper. Now, how the hell do you do that? So there would be me, in the back end, a team, I think there was about 10 of us, would get the brief and think, okay, Mr. David McIntosh of, whatever else it is, within 5 paragraphs, within 2 words, within this, that, the other. And then all of a sudden you get an ad for, let's call it Audi or Mercedes. Be like, oh, are you, this is David driving his Audi. It's like completely different. So getting that kind of level of context, the accuracy, the value instantly is just like anyone who has experienced media monitoring, I think will see the value. Anyone who receives the media monitoring will see the value. But unfortunately, the people who just don't see what it takes to get there is just, I can understand how they'll struggle.
Yeah, look, it's something we continually work on. And we do this with our customers. So we'll regularly self-check in terms of what's the false positive rate. And so we'll send, say, a list of 150 articles to 2 or 3 different clients and ask them to rank our scoring on them and look for that true positive versus false positive piece to try and update and slightly improve the way we're reading around companies. That's an iterative process that just continues. And I think if we weren't doing that, if we were stationary, then we're going backwards. So it is a difficult task. You're quite right. And for those who are lucky enough to never have had to do it, well, hopefully Bluefire can help you by doing it for you. So it's a challenge.
Thank you so much for all of that, David. Mark, I think I'm out of questions. I've asked all I could for the minute. I'm sure I'm going to have more questions when I wake up in the morning.
Yeah, that's fine. I think some of the things. Well, sorry, all of this was quite valuable, and putting because there's many different ways that we could kind of look at this. People might be interested in this sort of thing for their own personal investing, or it might be how do they use this in their current work because they do work in finance right now, or even in other industries and need to manage. Like I've always been a believer in the drivers of business to 3 things, right? It's either you're increasing revenues, you're reducing costs, or you're reducing risks. And by figuring out one of them, that can help with the other 2. And it's very, very interesting to see how Bluefire has come about, because I've seen personal journey, in terms of trying to set up a business and trying to sell our ideas, our data-driven insights. We've gone through all of these different things. But one of the things that I found was, the ups and downs. I mean, one of the things I found personally quite valuable for anything like this, and so, this might be interesting for people with other systems that they might be using, is, David, what are the current kind of things that you guys are maybe not super current right now, but have you got any kind of flagship events that have happened that people here in Australia might, we spoke about China at the start, but have you seen any kind of interesting events where the risk signals were being pulled up? Because that could be quite interesting to talk about.
Yeah, look, we've got a detailed deck of a myriad of situations, but probably a couple that are topical. We were on a podcast a couple of weeks back, and one of the companies that came up was Wirecard. Everybody's heard the Wirecard story, but Wirecard for us wasn't that difficult to spot if you were looking at the various data streams that we look at. I don't think it's any state secret that there was ultimately a fraud in the accounting, but Emmalyn picked up accounting irregularities going back as far as 2018. And everyone on the call probably knows the Wirecard story around its issues in India and so on. But there were flags very early on. And it sort of goes back to the storyline of risk that we observe in these collapse events. They're never triggered by one thing. There's always a build-up of these patterns, and Wirecard is, a poster child for that build-up of pattern. One of the more interesting things that I think popped out in the last 6 months was reading around Detroit auto industry journals and picking up that the car manufacturers weren't able to complete car vehicles. And this was back in 2020 November. So there was nothing in the local press at that point around semiconductor shortages. But certainly the industry in Detroit and the journals that we read around there were complaining about the inability to complete auto vehicles. And that was something we surfaced to our customers very early on. So again, the value of reading at large, but reading also with precision, looking for impacts, negative impacts to the target company. Obviously, if you can't complete the end product, you're probably going to have an issue as a car manufacturer. So those two sort of jumped to mind initially, but again, there are so many of these situations. Steinhoff, Agricoaltis, Into, Burford, Thomas Cook, Huarong, China Fortune, they keep happening because the industry isn't set up to look for these idiosyncratic tail risk events. It's very good at managing betas, but when these painful events occur, the industry typically isn't set up to look for these type of events ahead of time. And that's really where Bluefire found its niche, and that's what we focus on today.
Have you found any use cases, or are people using it outside of a capital markets kind of lens? Because this is the kind of thing that could be very interesting for, say, investigative journalism. If yet they had Bluefire, I'm sure that, they would be finding all these interesting kind of news articles or things to delve into. So yeah, I was just curious of that. I think you said no, but that's okay. Do you see it used, outside of the space at all, or these ideas?
We're starting to see some more unusual use cases coming through, but we deal with institutions, so we're not able to deal with retail based on our licensing. But exchanges have certainly expressed interest. Data vendors, obviously, because we're producing insight from the data being the raw ingredients. We have been contacted by a number of legal firms over the years saying, well, if we're in the business of managing insolvency and you've got this forward lens on companies that may be approaching collapse, could that be a use case? Possibly, but by and large, no, we're very much tethered to the capital markets, and we work across the three main verticals of investment banking, asset management, and private wealth.
Okay, very, very good. What's next in terms of, what you see as kind of bold predictions, not necessarily Bluefire per se, but just your, what's a big kind of thing that you might say, or, what do you see for the rest of the year? So just this short term, we've only got 4 months left to go, but it seems like things are just still crazy.
Well, I guess we're looking to see if and what happens in relation to the effects of QE. Does that subside? Does it continue? What are the ongoing effects of COVID in industries and sectors? And what do we see that then from the modelling perspective? I think I mentioned before that the forces of QE are difficult for, no state secret, the quant shops really struggled in March, April 2020 because massive regime shift. And so we're really keeping quite a close eye on what do the models and our statistical performance look like as we drive through 21 into 22. In terms of what are we seeing at the coalface, we think there's a real opportunity looking at credit risk and looking at maybe more realistic, real-world views of credit risk in companies as opposed to some of the more historical linear methodologies of looking at credit risk. And that's something that we're quite focused on internally and working with customers on.
One thing that I recently did with a firm was around the analysis, very brief kind of analysis, but I'm sure that it would be interesting to dive deeper into it. And from a BlueFireAI perspective, this could be interesting. Around what's known as meme stocks. So I'm not sure if everyone in the group has heard the term, but popular on social media enough that, it's becoming viral, or it's memeing in the sense that there's a lot more chatter around it on Reddit and other kind of socials. Google Trends, for example, might be showing that some of these search terms, whether it's tickers or the names of the stocks, might be memeing, so to speak. And the point there was that what we found in some initial kind of analysis was showing that once something has kind of starting to hit a peak, if people are getting in after that, it's almost like the shoe shine boy for Wall Street. When the shoe shine boy is giving you stock tips, or the taxi driver is giving you stock tips, it may be too late. And we found that for quite a few Australian meme stock type names. So whether it was Doe or Digital Wine Ventures, or even Kogan to an extent, and Zip, and some of these other kinds of names. Have you guys done anything? I know you said you don't really look at necessarily the socials, but other signals that you see in the news that something is getting quite popular in how it's being spoken about, and that maybe people are piling in after the fact? Do you see anything like that?
Yeah, so we don't look at social media by and large in a non-China variant. In China, we have to have a finger on social media because of the sheer amount of retail investing in that particular market. But ordinarily, for a systematic model, noise is the antithesis of what we want. So we don't look at social media in any other market than China, I'm sure. That said, so if we think about our framework, and this has come up quite a bit, Bluefire, do you look at Reddit stocks, and do you look at meme stocks, and what's your approach to that? We're typically not going to see anything in the financials of a company that suggests any form of frothiness or potential weakness. We may start to pick things up in the behavioral profiling piece when we're looking at analysts and their views on the earnings of the company, or if significant investors or high conviction investors are starting to position out of companies or into companies based on what they're seeing in prices. I would think more often than not, though, we would be seeing things in the market data. So short presser, trend, clustering, and liquidity profiling piece. But it's not necessarily something that we set out to achieve. Our sweet spot in terms of information value is between 3 to 6 months. So we're not working with the high frequency people. We're not working with intraday trading. That's not typically our customers. They tend to be long only or have relatively long time horizons, and an interest in moving that risk around the book based on a forward-looking lens. So it is an interesting one. We've certainly been asked that question many times, but they tend to be more short-term driven type trading opportunities, and that's not necessarily where we play into.
Okay. No, fair
I think, David, you mentioned in our earlier chat that a lot of your charts are boring, but intentionally so, because boring gets you safe returns. If you have lots of data on, small outperformances, small edges, stable returns, that's the kind of thing that gets you the wealth or the better returns than your average. I think to your point about the high frequency stuff, if the earnings capacity does not match the value, at the very least, amongst other fundamentals, then it's not a market that Bluefire plays in.
Look, if the prices for the company in question remain elevated, we would certainly start to pick up a disparity between valuation and cash generation, for example. That would come out in the models, because when we're scrubbing the balance sheet and the cash flow statements, we're absolutely looking for deviation from pattern. So ultimately it would, but that would probably have to be perpetuated for a period of time as opposed to intraday, intra-week type moves, because that's not the sort of the short-term space that we're focused on. So I think evaluations were frothy for a continued period, and that would probably need to be measured in months, not weeks. Certainly, when we're picking up surfaced financials, I'm sure Emmalyn will be looking at deviations in pattern based on historical norms. And that's what we're seeing anyway with the way we look at data around companies.
Thanks for that. Curious because just from the previous answer that you had, you started speaking about some of the other elements within Emmalyn and BlueFireAI. I've worked on kind of different systems, multi-factor kind of models that would rank different equities based on areas like value, quality, and momentum kind of factors. And then there were other factors that looked at the accounting risk on the balance sheet and things like that. But are there different kind of areas within the BlueFireAI box, so to speak, or Emmalyn?
Yeah, we touched on it before. There's the 4 primary lenses that we look at. So fundamentals, risk events, behavioral, and market. I mean, the thing it really comes back to is what are the individual inputs into that model and what's the specifics of those inputs and the source design around that. And that's probably a conversation for another call. We could go on an entire call just on source design. But again, if anyone's interested in where we play to on that piece and what's actually going into those models, and when we're talking about fundamentals and balance sheet cash flow analytics, what are we actually looking at and how are we surfacing that to the customers? There's a lot going on in Emmalyn's mind. At any given time, she recognises approximately 1,500 individual states of being as it relates to potential risk in a target customer. And if so that's not clear, think of looking at the night sky. The stars represent individual pieces of intelligence. It might look like a random array unless someone points out Sagittarius, Leo, Panhandle. So her real unique skill is connecting those individual dots of intelligence into something that's recognizable at the human layer. And again, that's really where the AI kicks in to produce intelligence out of what seemingly could be random pieces of intelligence. But that's a bigger conversation than perhaps we have time for here. I promised we wouldn't get bogged down in mathematics and the specifics.
We can save that for another time. But if people are interested, I've thrown BlueFireAI's homepage in the chat. But if people are interested in following you, David, or anything else that your company is doing, where can they go? Is it mainly the homepage?
Yeah, the website carries the majority of information. Anything more specific, then by all means, please reach out to me. Happy to explore the conversation. I think it's important to just note that we are working with institutional customers only, not retail. It is what it is. It's a licensing requirement that we have around the world.
Okay, fair enough. We don't seem to have any other kind of questions coming through in the chat at this stage. If anyone did have anything that wasn't raised here, we're going to throw all the links to various things in the show notes on the YouTube page. So that'll all be up there. Hopefully I'll be able to sort that out later tonight.
And don't be afraid to engage on LinkedIn as well. If you guys get any questions, our chat's definitely going to be linked on LinkedIn. Feel free to ask David. I'm sure he'll be more than happy to oblige.
Absolutely. And one last thing to David, I did see a note about the FAQ and the line item, so I will go in and adjust it. Thanks for bringing that up. It's a small nuanced piece, but I will make that slight adjustment in the FAQ. Thank you again for highlighting that.
All right, perfect. Well, David, thank you very much for your time and agreeing to come on board to showcase a bit more about Bluefire and Emmalyn. And if we have more of these quantitative finance events, hopefully we'll see you in the audience. And for everyone else that's listening in, DSAI, we are hosting a number of events, as we mentioned at the start. We're going to be doing more of these talks. There's a big data hackathon at the end of the year, so stay tuned for that, Data for Social Good. In the meantime, thank you, James, for emceeing and hosting all of this. And thank you, Mr. McIntosh, up in the Sunshine Coast.
Yeah, back to the sunny coast. Look, thank you so much for the opportunity to speak and the interest in what we're doing. It's we think it's exciting. We have to try and make risk exciting, which is not the easiest process in the world. But we really appreciate opportunities such as this to share our work. And thank you again. Appreciate it.
Perfect. All right. And all the audience, thank you for coming along. We hope to see you again on the 30th of August for the next online chat. Stay tuned to the socials and emails and meetup groups for any more stuff that we'll be doing. All right. Take care, everyone.
Thanks so much.
Thanks, David. Bye. Thanks, everyone.